Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. Well, I had a great email from Neil this week, and he wanted to get some more information about how I day trade the markets, in particular in relation to entries, exits, and so on. Now, I'm in the process of putting together a day trading manual for those of you who are day trading the markets, but I hope that this video will help give you a little bit of a head start in the right direction, and I hope you'll see exactly how easy trading support and resistance can be. Now, it takes a little bit of faith and a little bit of patience, but once you get the hang of it, you're going to be amazed at how well support and resistance lines work. Now, unfortunately, I am recording this video on the weekend, so the markets are closed. I can't give you a live shot. I will try to give you a live shot, try to record something during the actual trading day, but the principles remain the same. Let me change my cursor here so that you can see this better. Now, the basic premise of support and resistance trading is that we identify our most important support and resistance lines, and we use those lines to trade off of. At those lines, we anticipate the market to do something. Now, I have a tendency to do a couple of things. First off, I try not to get in and out of positions too often. If I take a long position, I will tend to ride the long position as far as it will take me. And likewise, if I have a short position, regardless of where the next support or resistance line is. The reason I do that is because oftentimes you can find yourself jumping from a long position to a short position, back to a long position, and not really make any progress on your trading. This is the session from last week, and you can see I've already got our support and resistance lines highlighted, and these are the same lines that I've posted at the forum. So just in case you think I'm doing this in hindsight, I'm not. These are lines that we pointed out in advance of the open, and you can see how well these lines have actually worked. But we'll get to that in at a later point in time. This video, I want to show you how I actually go about trading these lines. Okay, now you're gonna have to imagine that this part of the screen does not exist just yet. I wonder if I can scroll it over without changing the sizing too much. It's the only problem with Ninja charts is they tend to expand and contract with the number of bars on the chart. Okay, here's the overnight session. You can see it's pretty much going sideways. It's a bit of an unwritten rule that you don't short a sideways trading range. I don't know why. It's just one of these things. I really don't know if there's a lot of truth to it, but I do tend to be a little bit more bullish in a sideways range than bearish. And maybe it's just one of these old trading wives' tales types of thing. But here we are. The market has just opened, and we're down here hitting our support line. And it looks like we drew that in somewhere around 188.50, give or take. That was our line of support. Now, what happens off a line of support? We anticipate the market to rally. And we can do that one of two ways. We can either wait for the market to give us a green bar, or we can place our entry above the existing bar. Or, and I'll give you more particulars on this at a future date, you can also look at buying above the close of the previous bar. Now, day traders do have a little bit of an advantage over position traders because you can see the market ticking by. You can see these bars growing or shrinking, so you get a little bit of a feel for what the market is doing in real time. In this particular instance, it would be relatively safe to say you wanted to buy above the highs that we have here from these last three bars. You can see these last three bars here all have the same highs, so you could look to buy above there after the market opened. If you're watching a momentum style indicator like MACD, you would also be looking to see that momentum has started to shift higher as the market encountered support, which is exactly what was happening with MACD as we were trading off of this support level. So there again, it makes it a little bit easier for you to buy the market should it rally. So the next bar, you can see it rallied. Now, if you did not happen to catch this particular bar off of the breakout here, you could look to buy the market on a move higher. Now, normally I would not do that off of this bar just because the next resistance line at 1192 is too close for you to profit. So what you would do is you would look for another opportunity to get in, possibly on a break of 1192. Ideally, what we would like to see is the market break and then react and show us that 1192 will still hold before we buy it again. But in this particular instance, I would be long off of the support down here at 1188.50. So currently I wouldn't be looking to add to my position. Now, support and resistance trading does require a little bit of faith. You will never ever really know what the market will do. I don't care which indicator you're using. I don't care which strategy you're using. Anybody who tells you that you will be able to predict where the market is going next is just a flat out liar. You have certain probabilities that you can work with. You can say with a reasonable amount of certainty this is a good place to buy or this is a good place to sell, but you can never say with 100% certainty that the market will do such and such, because the moment you do that, the market will turn you into a liar. So when we encounter support, we anticipate the market to hold support and to rally. When we encounter resistance, we anticipate that that resistance will hold and the market will fall off. Now, that is all subject to trend. We do have a sideways moving market here, so we would expect the market to bounce between support and resistance. If we have a downtrending market, we expect support to fail and resistance to hold. And if we have an uptrending market, we expect support to hold and resistance to fail. So let's play this forward a little bit. Now, this is actually very difficult to judge. In hindsight, I can tell you what to look for, but if this were happening real time, I would not have recognized this as a reaction to 1192, which in fact is what it is, because you'll see that the next bar or a few bars later, we actually get a breakout of 1192. And if I remember right, oh, wait a minute, there we go. We get the breakout of 1192. You'll have to excuse me. I thought that the market just took off straight from here. But we got the breakout of 1192 and we got the reaction to 1192. Now, what we would anticipate is that the market would retrace from 1192 all the way back down here to our support at 1188.50. But if we're already long from here, from 1188.50, I would not be looking to sell 1192. Certainly you could take profit at 1192. There's nothing wrong with that. But at this point in time, I would not be looking to sell this line just yet. Okay, now we come back with support, which is our red-green bar combination. So you could be looking to buy now on a break. I would not necessarily buy the breakout of the green bar. I would probably be looking to buy a breakout of the red bar. The reason being that we do have resistance here, and I would expect to see a greater retracement. I would expect to see the market retrace back to here, to 1188.50. But it did not. If you entered above the red bar, you'd currently be long. And you can see that you got a nice rally as a result. Now, the big question is always, well, where is the market going to next? Well, as support and resistance traders, we have a pretty good idea because the markets will move from support lines to resistance lines, and from resistance lines back to support lines. So after a break of 1192, we would anticipate the market to trade up here to 1199, to our line at 1199. There's a little hesitation. If you missed here the breakout at 1192, this would be another opportunity to get in, albeit it's not as grand a move because we're relatively close to 1199. But you can see you would have captured a nice little rally here, and now we're trading awfully close to our 1199 line. And what would we anticipate once the market hit 1199? Well, we would anticipate that the market will retrace back to 1192. Why? Because that's what support and resistance lines do. The market bounced off 1188.50 and traded through 1192, came up here to 1199. We would anticipate that it would bounce off of 1199 and trade back down to 1192. Now that is one method to trade this. The other method is taking the trend into consideration. So if you are going to trade trend only, then you would not be looking to sell 1199.50, rather, or pardon me, 1199. Rather, you would just be looking for an opportunity to buy support and hopefully see the market continue higher from here. Now, buying support usually means that I would be looking to buy support off of one of our lines, namely 1192 or 1188.50. Or if the market broke through, I would be looking for a retest for the market to hold back here at 1199 before I bought it, to see it go up to 1202, and that would actually be very tight. Or same thing, if we got a break at 1202 and a retest of 1202 and we saw support come in, remember support is our red-green bar combination, then I would be looking for the market to rally up to 1206. And that's really all that's to it. Okay, let's see what's happening here at 1199 though. Okay, 1199, we have, let's say for instance, for the sake of argument, that we deem this to be close enough to 1199. Now remember, support and resistance lines, well, here we were very fortunate. The market hit our line bang on the number. Actually it looks like it went a tick or two lower, but sometimes it will come up a tick or two short. And you need to consider your support and resistance lines a little bit more as zones. So the market is obviously slowing here as it hits 1199. It didn't power on through like it did here at 1192. It's starting to put on the brakes. The fact that we have a red bar, that is resistance. We have our green, red bar combination. So if I were looking to sell this market now, I would do one of two things. I would either short the red bar here, or I would short the bar prior to it. Or if you were watching the market unfold, you could even short the closing price. and you would have to wait for this bar to complete, and then you could see it on the next bar. Each of those strategies have certain advantages and disadvantages, certain degrees of risk. As it turns out, the ones that have lower risk amounts have the higher chance of getting whipsawed, and the ones with the higher risk amounts have a lower chance of getting whipsawed in the trade. And that should make sense to you because the trades that have a higher risk amount allow the market a little bit more breathing room, and the trades that have the lower risk amount, well, of course, you're trading a tighter trade and there's a greater likelihood that you're going to get stopped out. Once again, since we're here at our resistance line, it would be wise to perhaps keep an eye on your momentum indicator or an oscillator or whatever type of indicator you like, if you like to follow indicators. And in this case, the market would be showing you, the indicator would be showing you that the market is overbought and that in fact momentum has started to shift lower, which is favorable for trying to sell this market. So let's say we're going to try to sell that red bar. We're going to sell below the low. What happens next? Oh, we're brought in and our stops go above the resistance line. And you can see that it was struggling quite a bit. Oh, that looks a little bit promising. And profit targets, again, it's a little bit of a variable. I'll discuss this a little bit more in future videos. You can either go with a fixed profit target where perhaps you're looking to take, this is the E-mini, say take perhaps 4 ticks or 5 or 6 ticks as a set profit target, or you might consider trailing a stop. Since I would personally consider this to be more of a counter trend move to the downside, I might be inclined to have a set profit target versus if I were looking to buy the market because we had this nice rally off of the open, I might be more inclined to trail a stop. Okay, but we're anticipating that the market's going to get back down here to 1192. So let's play this forward a little bit. And you can see it's humming and hawing. Oh, there we go. We're making a little bit of progress. If I was trailing a profit target, I probably would have hit it here. I see as the market traded to 1196. I think that was probably a full point. Oh, and you can see we're still sweating it out. And the market's taking its time. Look at all those tests and retests of 1199. Oh dear, this is the hard part here. This would be the really difficult part to ride out. Okay, there we go. Oh dear, it's trying. Every time it heads lower, it comes back up. But look at what happens. Even though we had all these little hiccups happening during the course of the day, look at where the market is wanting to go. It's wanting to go back to our line of support at 1192. That's the beauty of support and resistance trading. Oh dear, look at that, back up. Are you going to get down to 1192 or are you going to make a liar out of me? All the way back up to 1199. Oh, and it finally broke. Let's just play this forward. And once again, if I was looking to buy, I want to see this market come back down to 1192 before I get a buy signal. Now, normally our support and resistance lines aren't spread this far. But in this particular case, unfortunately, they are. So I'd be watching 1192 for a chance to buy. And actually back here, once the market hit 1199 again, I got a little bit absorbed in trying to see whether it was going to hit 1192. But once it hit 1199 again, look at what happened. Let me back this up. Okay, we hit 1199, our resistance line, and What are we looking for? We're looking for an opportunity to sell. Well, very next bar we have resistance. Once again, you would look to sell below the red bar, and you can see it worked out not too bad. That once again, you could take 4 or 5 or probably 6 ticks out of a little move like that to the downside. And you can see from the time this is already into the overnight session. So I hope that helps you a little bit. I'll try to clarify further in future videos, but that's the essence of support and resistance trading. Watch the lines, wait for support to come in, buy support. Wait for resistance to come in, sell resistance. If you're going with the trend, try to trail a stop. If you're going against the trend, go with a profit target. If you are in any doubt, always go with a profit target, either with trend or against the trend. And that's this week's Tricks of the Trade.